Hello, today is Friday. It is 1:50 in the afternoon, so it's not at the actual close. I want to get this out to you. It's been a very volatile week, but I want to kind of summarize to kind of keep you level-headed because after a really nice week, comeback last week, we often see this type of grind action back and forth. It is so frustrating. It has me frustrated, and I'm used to seeing it. For those that are new clients or even existing, it drives people more nutty than any real price action. It's the back and forth where you're like, oh, up 2% one day, fantastic. Then you lose 3 the next. So it's been a week where gains have been difficult to sustain and maintain. Sorry about that. It's tax season, so I'm getting lit up. So I want to get this out to you. But in short, stay level-headed here because look, here's the week price action, okay? This is the performance for the week, okay? So you can see IWM, which is small caps, is actually underperformed. And I've used this opportunity to buy into these areas on dips. Have I timed it perfectly? No, but on dips, I need to add more to value areas. The real issue this week, which I had a very strong feeling that it would be kind of like back and forth. A lot of times you're best not to do anything but on dips, consider adding if key levels hold. Right now they are. Price action in the NASDAQ, even though it doesn't show it here, is definitely lagging significantly for the last 3 weeks. I've had a lot in growth. We got hit decently hard, which is unfortunate. So I've been reallocating into value names, basically the comeback trade. I do not think that's over because I do not think interest rates are going to continue going lower. I think they go higher, but short term, it would not surprise me to see the 10-year treasury yield, which has been really a big problem for the NASDAQ, the growth leaders. It would not surprise me to see the 10-year treasury yield calm down a little bit, maybe even have a week or two for the NASDAQ to really get going. And then I think the market might stall for a little bit. We might rally through April. Again, I'm going to watch price action, but I'm hoping we rally kind of late April, but this seasonality is not fun. This is usually one of the most difficult periods from a seasonality standpoint. So I'm viewing this as an opportunity to get into value names that finally got a hit that have been very, very strong. And so on a Friday like today, where we had quadruple witching, which you're like, what is that? It's basically a lot of rebalances for the indexes. I'm not going to go into it too much, but it causes crazy volatility. And so at the open, we were down a significant amount. It causes a lot of chaos, but a lot of times it happens throughout the week, which certainly did not help out with the Fed meeting and all the volatility. In short, it's been a crazy week, back and forth, back and forth. But I want to keep you level-headed because really the performance has not been that bad in the indexes. I'm hoping that growth gets a bid and my new trades in small caps get going. I think we're much better balanced at this point. So have I timed it perfectly? No, it's frustrating. But we have been able to reallocate some to the value on a dip, which is what I've been trying to do and be patient about. Last week was a very, very strong week. Rallied strong, usually see some give back after a week such as last week. So let's go through some of these charts. Okay, the S&P 500, okay, it's actually been pretty strong. We do not have a cross since a couple weeks ago. The cross and the 8-day and 21-day, we're in a good stance here. So we're still okay here. It's not been a fun. Thursday was brutal. I mean, that was for NASDAQ, a 3% down day, 3% down day for even the Russell 2000, which is small caps. Not fun. Okay, so in short, that's a good thing. We haven't had that cross. Price action is hanging in there for right now. Again, a lot of the volatility is going to happen at the close. So I want to keep you aware of that keep level headed because I don't want to force an opinion based on the close price action, because a lot of things happen with quadruple witching at the end, and I don't want to have any real opinion based on the market based on what happens because of quadruple witching. So I'm just being cautious there, and I have some dry powder to add should I need to. So the 5-day focus on the S&P 500. This is interesting that, the last time I did a recording was a few weeks ago. Interesting enough, these lines have not changed. So we have retested these lines, same exact levels. Now, support for next week will probably be 39.10 if it holds this week. 38.87, which we tested today. That was not fun, but we did bounce off that pretty hard. We went a little bit lower into 38.70 range and held, which is good. So in short, here's kind of the levels that I'm watching. Had we not been able to bounce off this, I'll be honest with you, I was ready to sell everything. That was kind of the last straw for me. If we go below that, us losing the 39.26 level yesterday was not a good thing. I wanted to give it some patience because I knew there would be a lot of fluctuation, and I also wanted the opportunity to, if I sold yesterday, I might not be able to get back in time today with those same dollars, just the way I have to trade for big bulk. So I got to be careful there. So that's where it's like, if I think it could come back in the next few days, I got to be careful in selling. The put call ratio, this is as of Thursday, still some complacency, but it could be argued with the Fed the way that it is, continually helping the economy. It's hard for the market not to be a little complacent, which is with as much as the Fed is helping. Certain areas I do believe are a bit expensive, but after this dip, it kind of resets things a little bit, especially in growth. Growth, I think, could be ready for a turnaround, some basing. We'll see how the market closes. The VIX, the fear index. Now you say, Jonathan, you said a warning flag is, 20. I think with this pullback and the fact that we can stay in the 20s is actually, it's a bullish sign. I'll be honest with you. A lot of people would say, oh, we can't get past the 20s. We're going here. I want to show you the next chart to say, listen, if we can actually have these volatile days and stay in the 20s, I think that actually says something. So maybe I'm not, I wouldn't say I'm naive, but I'm also being realistic to say, listen, we've been in periods of time where we've been well below this phase, below 20 for years and years and years. I mean, these were great years. Recession here, come back, and we're slowly working our way down. Okay? So I think it's actually a positive sign. Now, will there be volatility at 20? Absolutely. That's what we've been seeing the entire week. Okay, so some people are saying this is very complacent, but it's very clear we've been in periods well below this. And I think if value can continue and, growth still is well off its highs, I do think value will continue its strength this entire year. It's going to come with dips, but I'm saying I do believe value is where the outperformance will be. But if growth can get a bid here, that's not going to hurt the indexes whatsoever, because the market will move with growth. You got to understand, for years and years and years, growth is all people have talked about. So when you get a dip in tech and we're starting to try to base here, bonds are pretty oversold here, it could set up for a nice bounce in the next coming weeks. So this is just showing the 10-year treasury. It's clearly the move is higher. I'm hoping that we can have a nice couple weeks coming up for the NASDAQ. So I'm pretty well balanced between growth and value. So the new ads have been in value. So I'm fine if growth does well, because I think it'll only impact and help value as well. So I think we'll probably go as tech goes here. But on dips, I've been adding into value. So this kind of shows you the pre-recession era. And this is where people are saying this move is just too fast in yields. And there's a huge psychological level right pre-pandemic levels, right around the 1.6 range that we have surpassed. And it's been not so fun for growth. Okay. So that right now, algorithms are definitely tied to the rates. And as rates have gone higher, growth has gone lower. At some point, we'll get out of that algorithm. But for right now, institutions are following it to the core. And we have to pay attention to this and don't be a hero in growth until we get confirmation. This is just another perspective. The TLT, huge move down, probably due for a bid at some point. Okay, so again, I do think the move is still down in treasuries. Up in treasuries, down in bonds. But it wouldn't surprise me to see a couple few weeks coming up where the Nasdaq might get a bid. So we'll see. Net asset manager, the National Association of Active Investment Managers. I struggle saying that every time for some reason. It's really not too complacent in my opinion. Here, where we saw the big dip, active asset managers were very, very cautious, and rightfully so. I mean, that was a pretty significant dip in tech very quickly, and I got hit as well. It's unfortunate. But it's slowly ticking up. So this will be very interesting to pay attention to. The McClellan Index, we did get a turn. Hopefully this continues back up, but not a bad thing to see this try to curl up after the volatility that we've seen. So that's really all I wanted to go over. I'll show you one more chart in the Qs. What I'm really paying attention to is, can growth get going? And it's been pretty good price action thus far today. Now, this was not fun. Or early this morning, I mean, we touched way down here. Again, you could take this for what it's worth. Many people were calling out an inverse head and shoulders, which head, shoulder, head, shoulder, and it bounced off these levels. So cup, and hopefully cup and hold. Are we out of the water yet? No. But it would be nice if we get above the 10-day moving average. Again, we're still below the 50-day moving averages. When moving averages are below the 50, that's not a good thing. But I do think that we could potentially get some movement in tech in the coming weeks if rates just chill out for a little bit. It'll probably be an opportunity to sell into, but I do think I want to keep some of my positions on because I do think growth will base, and I think we're working on that as we speak. But if this loses, which volatility could very well pick up toward the end of the day. So in short, it was a crazy week and it's not over yet. Okay, so hang in there. After a strong week that we had last week, this is not surprising to most investors, clients specifically. I know the back and forth is painful, but again, I show you this and it kind of shows perspective. Just calm down. It usually balances out. This is ugly. This is why I bought it. Okay, so hang in there. It's not fun right now. Price action was a little worrisome. I mean, like I said, my hand was on the sell button had we lost 38.87 and not held. Right now, we're hanging in there. So I am encouraged by that. The close will be interesting, but I'm not going to let it change too much of my positioning because it's a huge rebalance, and a lot of times mistakes are made when you base it on quadruple witching. So I'm not adding and I'm not reducing. So if it comes with some pain at the end of the day, I'm sorry. We got to battle through that. Okay. Hang in there. We'll be okay. Friendly reminder that this is for educational purposes. This is not a recommendation or sales. This is mainly just to keep my clients aware and my thoughts on where we're headed. So I'm actually optimistic at this point. I actually like what I'm seeing. This test back to the 20-day moving average and the 10 and 20-day moving average, and kind of getting close to back into this range. Would it surprise me Monday to see some choppiness? No. But we're seeing some good things base at this point in tech. It might take more time, but this is not bad price action thus far. There were some worrisome times, like yesterday. That was not good. A lot of things combined at the worst possible time. So we'll leave it at that. Thanks for your trust. Hang in there. We'll get through this. Hopefully growth gets a bid, and I think that'll only help the indexes for a while. And if growth does not really get going, I think the market will struggle, and I will make some very drastic moves. So I'm very realistic. I have no problem selling everything if that happens. Right now, it's just back and forth. I know it's painful to the mind, but this is usually how bases are established. So hang in there. Appreciate you guys. Have a good rest of the weekend. Get some sun. Watch some basketball. See you guys. Bye.